This is the lecture material for Chapter 5, Employment and Related Income. What we'll talk about in this chapter and what's found in your curriculum material is details around employment income on a T4 slip with some specific emphasis on addressing tax-exempt income that shows up in box 71 for Indigenous individuals who are earning income on a reserve. We'll talk about some of the credits that come from employment income, like the Canada Workers Benefit, as well as how the non-refundable credits that come off a person's paycheck, like CPP and EI, end up on the tax return. Deductions from employment income, as well as how we deal with casual labor tips, workers' compensation benefit income repaid, and T4 employment insurance. As always, there are some UFile screen capture videos for you on the Google Classroom if you find it helpful to actually see the navigation of entering the information around employment situations from the perspective of the UFile software. It might be a good idea to actually pause the video and go and look at those immediately before you listen to the rest of the material. So we are very familiar with the T4 slip. However, there are two sections to the T4 slip, and one we're often more commonly seeing information in than the other. And we want to make sure, as we're working with the clients that we're serving, that we're not missing the information that tends to be shown in the lower portion of our T4 slip. So we're going to pay some specific attention to what may be put in the boxes in that section. So the larger section here on the right-hand side of the T4 slip is the area that we're most commonly going to see, and that includes all the details that you would typically see on a normal pay stub. What's the income? How much is the CPP, EI premiums, tax withheld at source, union dues that are taken off, and in some cases also things like charitable donations that might be taken right off a pay stub. And this is then the total of all those amounts for the whole year. When we look at the back of a T4 slip, this is pretty tiny in the video, I'm sure, but I give this to you also in the curriculum. You can see that on the back of a T4 slip, it will identify what each of the boxes is referring to and on what line it will ultimately end up on the tax return. So that can be a helpful reference for you when you take a look at that information. But one thing I did want to point out to you for this year, for 2020, is there are going to be new boxes that are not shown on the back of the T4 slip at the moment, that are specific to the reporting periods for the CERB benefits. So what will be required for the 2020 tax year is that employers are identifying on the T4 slips the amount of income that an employee earned during specific time periods where they may have been eligible to receive CERB benefits, in order for the CRA to be able to see clearly whether or not any overpayments were received by the individual claiming CERB for the different periods that they could apply for. The codes we know as of the end of September are the ones that are listed on here, and these are codes that you're going to see shown usually or most likely in the bottom portion here of the T-slips. We'll have to wait and see. We haven't seen what the new T-slips will look like, but just something to pay attention to, and where that may certainly be very important to report that information correctly so as to correctly calculate the benefits that an individual was entitled to with CERB. How do we get this into the UFile software? Well, just as we've seen with all of the other things we've entered, we need to start off by going to the page that says T4 employment income. This is a default that is always ticked on the UFile software, so it's already in your left-hand navigation pane where employment and other benefits is shown. But once you click on that, you can open it to the different options here for T4 income and T4E. So T4 income from work, and T4E is the bottom one here for employment insurance. When we open our software, we'll be doing the same thing we've done with any of the other scenarios, where you're matching the different amounts that are in the various boxes on the actual T-slip to the entry fields that are available in the UFile software page. And whatever is shown for that box number in the T4 slip is what you're going to enter into the software that is on the UFile. You will always enter each T-slip separately, so that may mean you have to go back to reopen another T4 slip to add another one, and you'll see how that populates the navigation menu with each of the individual T-slips so that you can easily see which one you've entered and which one you might have missed. And once you have entered all the T-slip information, what we want to make sure we spend a little bit of time talking about here is understanding the impact of employment income from somebody who is an Indigenous earner. So When it comes to earnings from somebody who is status, the income that they earn when they are living on a reserve and working on a reserve is 100% tax exempt. And it is exempt because that employment income is classified as personal property. And personal property that is located on a reserve is exempt under the Section 87 of the Indian Act. So what determines whether or not something is actually considered property on reserve is a matter of several different connecting factors. So number one, where is the location of duties of employment? If they are to carry out their duties of employment on a reserve or not? What is the residence of the individual? Do they live on reserve or off reserve? And what is the residence of the employer? Do they live on reserve, or are they the employer residing on reserve or off? And all of these things will be taken into consideration to identify whether or not the earnings that that individual has from their employment is considered to be on reserve, and therefore that is personal property that is exempt from taxes. Fortunately though, most of the time when we are working with tax returns for Indigenous earners, it's clearly identified on their T-slips that the income they've earned is already determined to be exempt right by the employer or from the source that it came from. And it is designated in specific boxes on the various slips to make it really clear that it is exempt income, which means there's no taxes on it and it essentially gets taken off the tax return. But in a nutshell, somebody who is Indigenous and who is living on reserve and working on reserve, their income is going to be exempt from taxes. So when we look at the information that's on the back of a T4 slip, we can see that one of the boxes that is identified in the lower portion here is the one that identifies box 71, which is Indian exempt income. So if an employee has amount shown in box 71, then that is right away telling the software when we enter it into the software in box 71, this is exempt income, and it will automatically remove it from the tax calculations. So there are other boxes in different slips that will also identify for the software that this income is completely exempt from tax because it is earned by an Indigenous individual. And on the various slips, there's different boxes. Again, you don't need to memorize this because the software knows when you enter something from those boxes that makes it exempt. But on T4 income, it's boxes 71 and 88 or 68 and 69. On the T4A slip, which is often used to report pension income, and we'll spend more time talking about that in Chapter 6, then there are a number of different boxes that will make that exempt income depending on the source of where it's coming from. And T4E, which is employment insurance benefits, there's box 18 that would be exempt. So if an Indigenous individual is employed on reserve and is earning exempt income and becomes laid off and then starts to receive employment insurance, the fact that their employment insurance premiums were paid on exempt income is why their employment insurance benefits will also be exempt earnings. The same thing relates to somebody who has been employed in an exempt income earnings and has contributed to Canada Pension Plan and eventually draws Canada Pension Plan for either retirement or disability, survivor, or whatever a reason that money is coming to them. If those premiums were paid to the Canada Pension Plan based on exempt earnings, then the benefits that they will draw from that plan will also be exempt. However, when it comes to CPP, there isn't a box on the T4AP, which is the CPP slip, that shows exempt earnings. So we will need to tell the software that we're dealing with exempt income situation. And we do this in the interview setup for the tax filer. In the top box, it says what are some specific situations that we might need to identify for the software. We've already dealt with the no income situation when we were dealing with low income or zero income filers and federal credit only returns. We'll talk about the specific situation related to immigrants or emigrants when we do the newcomers chapter in a couple of weeks. And the status tax return for a status Indian is another one that we would identify for the software here so that it knows that we do have some income that is exempt that may not be shown as exempt income right on the box of the T-slip. We need to identify that for the program. So once we have clicked on the status Indian, then we can see here that it is going to open that on our navigation pane. When we click on that and open it, it gives us the option to identify here a question: do you have status? Are you a status Indian? Yes or no. If you indicate yes, then we have the chance here to identify what is the income that's been reported on the return that is actually exempt, but it wasn't in a box that said exempt. So the example I gave you was somebody with CPP pensions coming in that should be exempt because it was earned from exempt income. So then we would enter the amount of CPP benefits that's exempt in here so that the tax is not paid on that. So it's not included as part of the taxable income. Including the income from Indigenous earners on the tax return, even though it's exempt, is actually important because it can help to generate other credits that they might be entitled to, such as the Canada Workers Benefit, or the what used to be called the WITB credit, which is a refundable credit, but you must have a minimum amount of income to be eligible for it, but not exceed an upper level threshold. And we can see on here that the section that is identified here with the red box, this is saying tax exempt income earned on reserve and reported on line 10,000 of a particular form. So if we have entered the exempt income correctly into the software, it will allow the software to use that information to calculate this credit, and it may mean that with the use of it, it generates a credit that would otherwise have not shown up because we didn't have any income on there. It can also mean that it stops a credit from being claimed because the income is over a threshold. But to be eligible for the Canada Workers Benefit, the individual has to have been resident in Canada through the whole year. They must have employment income or qualifying earned income of at least $3,000. And that's where making sure we've included exempt income on here can make a difference, because if we didn't include it, then there would appear to be no earned income at all, and this benefit could not be claimed. But the individual must also be over 19 years of age or older, or they have to be a partner, a married partner, or the parent of a child if they're under 19 to qualify. They can't have been incarcerated for 90 days or more in the year, and they cannot have been enrolled full-time for more than 13 weeks with a post-secondary institute unless they are a single parent. If they're a single parent, then they can have been enrolled full-time for longer than 13 weeks and still get the Canada Workers Benefit if they are a parent. What's shown on our screen and what's in your curriculum is the current limits for the 2019 tax year for the upper thresholds for this credit. So individuals who have more than $3,000 in earned income, but whose income does not exceed the upper limit, may qualify for some of this refundable credit. And the amounts and the thresholds will vary depending on whether the person is single, or is a single parent, or is in a couple relationship, or has a disability tax credit. So again, the software does all of the work to calculate the eligible benefit, but as we must have made sure we've entered the correct information and linked people's tax returns, because we're doing returns for our household all together if we possibly can, so that the right amounts can be claimed. This credit can be claimed only one per household. So the one Canada Workers Benefit would be claimed on one partner's return for themselves and their partner. And the amount will be no different whether it's on my return or the other person's return, because it's calculated for both of us. However, there is a top-up to the Canada Workers Benefit that is a disability supplement. And this disability supplement is only available to an individual who has a disability tax credit. So if we're doing tax returns for a couple where one partner has a disability tax credit and the other doesn't, we want to make sure the Canada Workers Benefit gets claimed on the return of the person with the disability, so that that disability supplement and the different thresholds can be correctly applied to the eligibility, and they don't lose out on any benefits as a result. So that's taking us now into looking at some of the non-refundable credits that are related to the employment income that a client will receive. It's often easy to mix up this information and think of it as deductions, not credits, but let's try and separate the two out. So for example, when you get your paycheck and you look at the amount that has been taken off each of your paychecks to go from your gross income to what your net income is deposited in the bank, the deductions that come off are things like tax withheld at source, Canada Pension Plan, EI premiums, maybe union dues, perhaps registered pension plan, maybe premiums to a group plan. But while those are deductions off your paycheck, they are not all a deduction on your actual tax return. So some of them are non-refundable credits, some of them are refundable credits, and some of them are actually deductions. So let's break it down a little bit. So the ones that end up on your tax return as a non-refundable credit include the Canada Pension Plan premiums that you will pay, the EI premiums you pay, and also if you make charitable donations right off your paycheck, you're going to see a box on your T4 slip that says how much you have donated through your paycheck to the whichever charity you are supporting as part of your employment. Then you'll also see that there may be medical expenses shown for the premiums that you paid as part of your group plan that represented the health and dental coverage, vision, physiotherapy, etc., that might have been part of your healthcare premiums. And the amount that is shown in box 85 on your T4 slip is a portion that is a legitimate medical expense to be claimed on your tax return. Once you enter the information into U-File from the boxes that are shown on the T-slips, you don't need to re-enter it in a separate schedule as a donation or as a medical expense. U-File will automatically populate those schedules with these amounts and will then add to that any other amounts you might add in the way of other charitable donations or other medical expenses. And you don't need to separately have a different receipt for any of the things that are already documented on your T4 slip. So those are non-refundable credits that are related to the employment income we have. The deductions that actually show up as a deduction on your tax return related to employment income are really mostly going to be union dues that we will see. And union dues may come straight off your paycheck and have the amount is going to be shown on the T4 slip of the individual. But it's also possible that the person might have to pay union dues separately from what comes right off their paycheck. This is often common in situations, for example, with nurses. So they may have union dues that comes off their paycheck for the healthcare facility where they're working, but they may also have to pay annually dues to maintain a nursing license, and they will have a separate receipt for that. So you would need to enter that into the U-File software separately. What comes off their pay stubs shows up on their T4 slip, you enter that with the T4 information. What is on a separate receipt, you're going to go into the employment and other benefits section of U-File and click on the box that says union or professional dues, and that will then populate our left-hand menu with the option to open the union dues field and enter the amounts that are shown on that receipt. Software will then add that amount to whatever is on the T4 slip for union dues and put the two amounts together as a deduction on the tax return. Another common set of deductions related to employment income is not actually something that we will normally deal with at the Voluntary Income Tax Program, but it does include having employment expenses, allowable employment expenses. This relates to an individual who has employment income and is required to incur expenses of their own in order to generate their employment income. Maybe a commission sales, or it could be an individual who doesn't have an office place in the city somewhere and has to have an office in their home. Normally that is not something that we will deal with at the CVITP level because it can be certainly more complicated figuring out what is personal, what is business expenses, but it certainly is another deduction from employment income that may be seen. Not all of the income that a tax filer might have is shown on a T4 slip. So some of the income that a client might come to us with may be in the form of tips or casual labor. And we still want to make sure that this gets put into our software because it is not only required to report any earned income for the year, but having certain amounts in casual labor or tips adds to what is called the other employment income, and that is added to the employment income from T-slips, and it's used to calculate that Canada Workers Benefit that's refundable. And so we want to make sure the right information is in there. So we would enter the information that's not on a T4 slip by again being in the employment and other benefits, first of all, and then when we've opened that in our left-hand navigation menu, in the box below the one we've been used to seeing where we're entering T4, we can see that there's two options, tips and other employment income. So by clicking on tips, that is going to give us the opportunity to write in there how much the person received if they're working in the service industry for tips, or if they were doing casual labor, could have been yard work, could have been babysitting, whatever it might be, where they did not get a T-slip and the amount is very nominal, so less than $3,500, then you can add that as casual labor in employment income here, other employment income, and that will show up on line 10,400 other employment income. Whenever we have individuals who have a much higher amount of other employment income and casual labor, if it's beyond $3,500, that would technically be considered self-employment income, which again is something CVITP doesn't normally do. And that individual would be required to contribute CPP premiums on that amount. And so if we put a high amount on line 104, Revenue Canada is likely to come back and say, this needs to be reported as self-employment income. Tell us what you're doing so we get the right industry code, and then they will calculate CPP on that amount. So it's only for very nominal amounts, but it is certainly something we will see with the clients we serve. We've also already become familiar with the workers' compensation income as stuff that is reported often on a T5007, and so we've gotten used to where we put that. However, in some years, an individual might have received workers' compensation benefits, but had to repay some of those benefits to their employer. When they've received it in a previous year and have now repaid it, the repaid benefits will show up in box 77 of their T4 slip as a benefit repaid, and it will become a deduction on their tax return. So when we're looking at the information on the back of a T4 slip, we can see here that box 77, workers' compensation benefits repaid, are going to get entered on line 200, well, it was 229, they've added a few zeros, so it's probably 22,900 now. It'll be entered as a deduction on the tax return. And where we find that information is in the usual place on a T4 slip. We're going to look for the box number that says 77. But you're going to see that there isn't actually a box number that's always saying 77 like there is for box 14, total income and whatnot. So you'll scroll down to about the center of the T4 entries, and you're going to see a field that says Other Information. Click on the triangle to see the list of options. And when you click on the triangle, you'll see that there's actually quite a number of different options that may be the codes that are reporting for specific boxes that are on that bottom section of your T4. You would choose the one that applies. In this case, it is workers' compensation benefits repaid. But this is a double entry field. So once you've entered the source of the income in that box, you now also need to separately enter the amount that's shown in there. And then that will populate the field in the deduction section of our software. So the most common ones that you will actually be searching for under other income would be benefits repaid for workers' compensation, as well as Indigenous earnings. So box 71, Indigenous earnings that are shown on a T4. If you're doing tax returns for years prior to 2017, there may also be public transit pass that you can put in there. That doesn't exist after July of 2017. But that's something you would commonly need to look for, and it may well be that this is where those codes for the CERB benefits, the amount of income earned during the CERB benefits, the new numbers are going to be shown. Box 85 is the amounts for medical premiums that you paid. That has a separate box, but it's not right in the very upper section of the T4 slip that we would enter a new file. You would actually find that just above this Other Information box on there. So that takes us through T4 slip information. Let's just take a brief look at other employment income, which is through the employment insurance program that we might receive. So employment insurance benefits could come from multiple different programs within the EI category. So it could be you were receiving it as a result of layoff. It could be that it's come as a result of being on maternity or paternity benefits. It could be because of sick leave, or it could be compassionate leave. So whether you are receiving benefits from one of those different programs or from several of them over the course of the year, the total amount is going to be shown on a T4E, reported in box 14, total benefits repaid. So the most common boxes we will see filled out on a T4 is going to be box 7, which is a repayment rate. It's either 0 or 30%. What governs which rate it is really whether or not benefits have been used from that program within a certain time frame, already, and this is a sort of a second or a third draw from the EI program within a certain window. It's a 0 if nothing has been withdrawn from that program within a certain time frame. So box 14 is the total benefits paid. Box 22 is tax deducted. But then in some cases we will also see students who are receiving a training allowance or a living allowance and tuition supports from the government in order to attend a post-secondary education program. So they may have a T4E with amounts shown in box 20, taxable tuition assistance, or box 21, which is non-taxable tuition assistance. So the sections on this T4E are the ones that are most commonly going to be seen on the returns that we are filling out or on the slips that clients bring us. One point just to make here is that box 22 is income tax deducted. EI often takes very little income tax off somebody's benefits, and so we will sometimes not see anything in this box, but it is important to make sure you're paying attention to whether there were tax amounts taken off at source. Since we don't see it all the time, it's easy to just presume there won't be anything there and totally miss it, even though it's clearly a box that's been filled out. The amounts that get shown here in other information, typically these amounts are going to already be included in box 14. This is just giving us a little bit more detail, and we don't need to actually enter those anywhere separately for the most part. So we get the EI benefits into the UFile software the same way we go about getting the T4 slip information in, by clicking on the employment and other benefits section of our UFile software. And then that will open to the different types of T-slips, and T4E is the very last one. And then just as we have done for all the other T-slips we're entering, we're matching the boxes that are shown on our UFile software with the boxes that are filled out on the T4E and entering the amounts in there accordingly. And again, here's our tax withheld at source in our particular situation here. So just a key one to pay attention to. And as we get to the end here, just one thing we want to finish off with is a lot of questions have surrounded the COVID benefits that were paid out from the federal government, and how will that income be received. The understanding we have at this point is that the CERB and the CESB, the students' benefits, is not going to be reported on a T4E or a T4. It will show up on a T4A, which we'll get very familiar with in our next chapter about seniors, because that's the slip that is used to report pension and annuity income as well as other income. So this would be part of the other income, and we'll have to wait to see what the box numbers are for that. But that is our understanding, is that it is being reported on a T4A. So that takes us through to the end of chapter 5. And what I would encourage you to do is to go through your practice case studies and enter the information to familiarize yourself with the entries from the T4s, and to complete your knowledge review case study and submit your knowledge review questions through the Google Classroom. As always, where there are questions or issues or concerns that need clarifying, please feel free to get a hold of us so that we can help to make this as meaningful a learning experience as we possibly can. We'll see you in chapter 6.